Welcome to Shark Cap Table Free. It's the best 1-minute deal maker you'll ever see. Now, this little spin button over here will give you 14 little hints so that you understand what's going on. You can also change the view from either Shark or Investor or VC, and notice all these guys have changed. Let's keep it at Shark because it's actually kind of fun. It's reminiscent of the TV program Shark Tank Zone. I love the program. It's informative. It's well done. Lots to learn. I try to watch it every Friday night. And we got some great ideas from that program on how to make this tool be effective. So, having said all that, what we're going to do is we're going to structure a capital raise by manipulating the 5 buttons down here. These are the inputs. And we're going to get 3 outputs in the investment multiple, the internal rate of return, and the ownership stakes. And notice when you click on these, you get a little help screen, just like you're going to get along the side here. And almost every major heading has got help. So if you don't know something, go and read about it. It's easy. So let's do a deal. You got a great idea. I've got some expertise. Let's combine forces. So let's put in a total of $10,000, you and me. And your idea is a really great internet one. You've got some really good technology. I've got some capabilities at organization and capital raising. And, well, we think because of various reasons that we got a $250,000 pre-money value. And we think we can sell our business, let's say, in the 4th year for approximately $2 million. Now understand, what we're doing is we're going to build scenarios. We're going to see what can and can't work. So next we're going to try to raise $300,000 from the Sharks. There's our $300,000. Now let's go and see what kind of a deal we've cut for them. The key issue here is the pre-money value. Notice that as we increase it, the price per share goes up, therefore the number of shares that they get goes down, and that's shown up here. Watch, we can increase this number here, and this guy goes down. So if we want to make a good deal for ourselves, we increase pre-money. If the investors want to make a good deal for themselves, they try to reduce pre-money value. There is some point where they're not going to go above. They'd like to go below always. And it's our job to try to keep them on a fair, straight, and narrow basis. Okay, so 3.5 Shark multiple. Well, according to our red logic here, 2 sharks are circling and 1 bumps. Not very exciting. A 30 to 40% internal rate of return. Well, 2 sharks nibbling, 3 watching. Again, not a really good rate of return. And the worst part about it is that we only own 46% of the deal, so we lose voting control. So what do? Well, one solution is to try and increase the exit value. But let's go to $3 million. Now notice when we went to $3 million, the internal rate of return got bigger, as did the multiple. So you might be able to go in there and say, let's start with a little higher pre-money value. Maybe $450,000, maybe $500,000. If you did that and they agreed, they might not. But now you've given up 40%. Well, let's set it back at $300,000 and see another scenario. Well, we've got to get this under, so maybe we just get less money. Let's go to $200,000 and see what happens. Well, there's 45, but now that raises the internal rate of return. So we should raise our pre-money value and bring down that internal rate of return a little bit. No sense in awarding them a huge rate of return by only getting 2/3 the amount of money. All right, so let's say this is a deal that works. We have an investment summary which concatenates all these numbers into words. We're seeking from the Sharks an investment of $200,000 for 31.8% of the company. For this investment, we will issue 534,000 shares at 45 cents per share. Based on an exit value of $3 million achieved in year 4, the Sharks will earn an investment multiple of 4.77 and a 47.8% internal rate of return. Founders and the option pool participants, if any, will own the balance, or 68%. Well, that's kind of cool because you can use that in your business plan or a summary. It's automatic no matter what you do. If you change these numbers, you can see that they're bouncing around. So that works pretty well. Now down here you can also personalize it with your name and your website and whatever. And you can also print preview. So see there, it fits all in one nice piece of paper. And you could make a PDF of it and send it out, or print it out and mail it. Ho ho, mailing, really? Okay. So let's come on back to the program. And that's it. Now look, we strongly suggest that even though this is a conceptual tool and probably you could make a little deal, you really need to spring for the light version, which allows you to do a lot of detail work, which is important in structuring deals, including doing some things with royalties. Royalties are a great way to increase the return of investors without losing control. You have to be careful that you don't give away too much. Now, all of these things are predicated on the fact that you should have some kind of a projection model so that you know what the effect would be on your cash flows if you gave up a 5% royalty. So to review, be sure you take this tool on your laptop to a negotiating session. Know in advance what your limits are. Look at all the possibilities and write them down on a piece of paper so you can say, well, guys, I don't think I want to do that, but here's another proposal. What if we increase this and decrease that? Would you like that? And don't start high, start low, but be prepared to negotiate. Get some money. Don't be a jackass and think your idea is worth $40 billion. The investors see this all the time, and they would like to work with you, but you cannot be unrealistic in your valuation. And this tool will help you see how they see it, which is the most important thing. Remember, you're selling to them. They're not necessarily buying, unless you might be Facebook too, but there are very few of those around. Get the money, get going. If you don't get enough percentage, then take a little less money and still get going. Thanks for your interest. Bye.